Hi everyone, this is a screencast for Independent Colleges Dublin on the area of CGT and CAT, really revision of reliefs. Okay, now I'd refer you to the BPP exam kit for FA 2013 and question 47, J.Adams, that starts on page 36-37. Okay, and what I'm hoping to do within this screencast is really give you a basic fix on the way in which your examiner John Morrison sort of tends to examine these areas, albeit on a fairly straightforward level. I would class this question as a sort of a mid-level difficulty question for P6 purposes. Okay, now in order to get the most out of this screencast, I would suggest that before you view it, you look at the area of CGT and CAT reliefs. In other words, you revise those areas, and in addition to that, that you actually do this question under exam conditions before you watch the video. And in that way, I think you'll get the most from the exercise. Okay, so in terms of a starting point for us, where we have a P6 question, the first thing we're going to do is not read from the top down. We're going to look at the requirements first. Okay, and the reason that we look at the requirements first is that we need to know what we're looking for when we look through the body of the question. Okay, if we read the question first, we really don't know what we're looking for. Okay, so when we look at this requirement, it's sort of quite pleasing, really, in one sense, because it seems to me that you're given a structure here. In other words, you're given a layout for your answer. In some questions that John Morrison examines in your syllabus, you won't be given a structure. You'll have to come up with one. But where we get a letter or a report or a memo of some kind, particularly when it's broken down into sub-requirements of A, B, and C, you know, it gives us a pretty good feel for how we would lay our answer out. Now, we'll be excluding Part B, the stamp duty, from this particular screencast and concentrating on A and C. So really our issue really is with the sort of the impact of capital gains tax and capital acquisitions or gift tax on a particular scenario. Okay, so on reading the requirement, aside from the fact that we have a letter and we've got a structure for it, what we'll see here is really that a farm is mentioned and also a gift is mentioned. And they've specifically asked us for details relating to any reliefs which may be available. Yeah. Now, one of the issues within P6, certainly in the area of reliefs, is just rote learning. You know, we need to ensure that we have rote learned in the first instance the conditions relating to all reliefs. Okay, that's your first port of call. Your second port of call really is to obviously do as many questions as you can. Now, the conditions, rote learning a set of conditions is not actually difficult to do. I think the more tricky bit is obviously applying them to the scenario, and you'll see that demonstrated within this question. I think the other issue for you is that it can be confusing. In other words, it's quite easy to confuse one relief with another. Some of them are very, very similar. So it's only by practicing that you're going to get better at being able to answer these questions. The other thing that I would mention to you on reading this requirement is, you know, the marking structure. You've got a clear guide there, 5, 6, and 9, as to the amount of effort you should be putting into each section. One of the things that I've seen students do quite regularly in a question, let's say like this one, is really sort of go to town on an area that they know and really avoid an area that they don't. You know, it may well be that one area will be stronger than the other, but what you've got to try and do is allocate your time accordingly, because, you know, P6 is not just about technical tax knowledge, it's about really, really good exam technique. And I've seen students pass this exam who have, you know, reasonably good knowledge, but very, very good technique. And I've also seen students fail this exam who have a lot of knowledge, but very, very poor technique. Okay. Over and above that, you know, when we work through the answer, you know, do bear in mind that in your exam kit, these answers are the 100% answer. You know, we don't need to produce anything like this to pass the question. And anyone who's been in the class with me will be familiar with me banging on about the fact that to pass P6, what we need to do is get more than 50% in each answer. That may seem like a very simplistic comment, but unfortunately my experience is students tend to think that they have to get 100% in questions to pass the exam. They don't. So really what you're trying to do with this question is to sort of do as much as you can in the time allowed. Multiply these marks up by 1.8 to get your minutes, and really stick to time. Okay, so in summary, before we look at the body of the question, really we've got a letter, we've got a structure to use. I see an intro line with perhaps 3 sections: CGT, stamp duty, and capital acquisitions tax, and then maybe some sort of conclusion with some sort of tagline on the end. And you'll get marks from the marker sometimes for just doing very simple things like lay out an answer in a professional manner. Okay, so we have a gift. They've mentioned reliefs. We know that it's highly likely that conditions are going to be in play. So let's look at what they give us in the body of the question itself. Okay, it's a fairly short scenario, which is good in a sense. So first area here is, the first thing that they mention is the chap's age. So Michael Adams' age, and in addition to that, they talk about his children. Okay, so what I would be thinking of, really, given the fact that I know that there is a gift in play, what I would be thinking to myself is, well, firstly, why are they given the age? And, perhaps it's that retirement relief may be available. We know that one of the conditions for our current tax year, FA 2013, is that the individual needs to be 55 and above to avail of the relief. So it looks like he qualifies at least under that condition. What else do we see in terms of paragraph 2? Well, really what we see is that word farm. Now that's got to be a signal for us in terms of agricultural relief. It's got to be. Okay. Now what we know about agricultural relief indeed is that there are another set of conditions. We've got the farmer test and we've got 1 or 2 other things. So really the triggers in the question are what we need to be looking out for. We've already got 2. So we should be thinking, really, as we read down these paragraphs, well, it's certainly reliefs. They mentioned that already. I've just got to see if I can come up with enough conditions. Now, we see that the farm has a value of 2 million, so quite a considerable value. So it seems to me that if reliefs aren't available, we could be looking at a fairly substantial tax bill, be it CAT or CGT. Okay. When I read down this paragraph here, it talks about something called the EU scheme now in relation to his retirement. Now, I may or may not know what that is, but it's also sort of linked into the fact that he appears to have let the farm. Now, that could be an issue because certainly one of the conditions relating to various reliefs is a time condition. In other words, the length of time that the individual farm has been farmed for. Okay, so we have to watch out for triggers. Yeah, the more triggers that we know, the better it's going to be for us. So moving on to the next paragraph, it looks like we're getting a little bit of information about his son John, about his properties or other assets, and again that should really trigger us towards agricultural relief and this area of the farmer test. Now, we're not given any other information in relation to John or his assets, so it may well be that we could have a situation where these properties, coupled with, let's say, what he's about to receive, i.e. the farm at 2 million, could be his gross assets or his total assets. And we'll come through to the detail of the farmer test when we look at the answer, but this information is obviously given for a reason, and there's no other information in relation to his assets. Okay, this point here, it's interesting that they tell us that if the properties were sold, they would realize a profit of 250,000 euros. I just wonder why they're telling us that. Are they prompting us that perhaps it would be an idea for one or other reason to sell the properties? They're not going to give us lots and lots of information for absolutely no reason. So I'm just wondering, what are they prompting here? Why are they telling us that there would be a gain? We can work out obviously 250 from the figures above, but why are they making a point of telling us? So more of that a little bit later. Next line here just relates to the status of John's sisters. I can't see that their actual status is that important. I think the key thing is that they exist. So again, you know, it's very rare that your examiner, John Morrison, gives you information for no reason at all. So it may well be that he's looking or suggesting to you that you could use Mary or Kate in some way, perhaps as a get out in relation to one or t'other of the reliefs. Okay, and then the final paragraph here, we have Michael is considering transferring ownership of the farm to John. So they're looking for advice in relation to the tax implications. Now, we've got to appreciate that where we have a gift to an individual for, in effect, no consideration, then we have CAT and CGT implications, and that would have been really prompted by the requirements. We would have seen that because they'd asked us to analyze and advise on the impact of those two taxes. So really what I see here is a chance to clarify the basic elements in relation to those two taxes first within each section. Look at whether or not the reliefs and indeed the conditions apply to these individuals, and then really look at possible tax planning measures if there is an issue. So that's broadly speaking how we should lay out our answer. And do bear in mind that the question specifically says that they have sought your advice. Okay, so they're really not looking for someone to sit on the fence. They're looking for you to be their tax advisor. So you've got to get yourself in that sort of mindset when you lay out your letter. It's not something that you can be vague about, you know, notwithstanding the fact that maybe one or two areas that you're not sure on. You've really got to make a decision as to whether or not reliefs apply or not, given the knowledge that you have on the day. Okay, so sitting on the fence is not a good idea. Okay, so really that's it in terms of the body of the question. Let's look now at the answer itself. I'll just move my PDF down a little bit. I've cut this answer into several different pages for you, so do bear with me. So really, first things first here, this is just the top part of your letter, and I've highlighted a few points for you. You can see it's a straightforward letter, and you'll say, well, that's easy to do on the day. Well, you know, we hope it is, because, as I say, you'll get marks for that, but I certainly find with students, the more that they practice doing this and laying these answers out carefully in their taught phase, the better they are at doing it on the day. Don't make the exam day the first time that you've laid out a letter, report, memo, etc. You know, certainly do it in your home studies as often as you can under timed exam conditions. You know, they do say that first impressions count, and I do think for a marker there's a certain amount of psychology attached to your relationship with your marker. And what I mean by that clearly is that, you know, the first thing that they're going to see is what you put down on page 1. You know, if you don't have an address for yourself, if you're not addressing it to J.Adams, if there's no title or date, you know, then you're really giving the impression that you're not prepared or indeed able to lay out professional information. And you know, without splitting hairs with you, then, you know, this is the professional level. This is one of the things they're testing both in P6 and the other papers, is that how professional you can be. So let's be professional. Let's do the simple things well. Okay, laying out a letter with a couple of addresses and a title and a date is not too difficult. Okay, so in terms of a sort of an intro here, over and above laying out the letter properly, you'll see that, you know, broadly speaking, this sort of first paragraph or first section here just really reiterates very much what's in the requirement. You know, we've got a nice little start line here. We could have said something like, you know, further to your inquiry, I can advise as follows. I like the way that they've laid out the 3 different areas here, albeit for the fact that's in the question. But one thing they have done is that they've made it clear as to, you know, who pays the tax. And we'll look at the difference between CGT and CAT. We've got the person obviously making the gift, i.e. the father, is going to be subject to the capital gains tax payable, and also in relation to CAT is the person receiving the gift. So in a sense, it's the opposite. Nice thing to do at the start of any letter for a question of this ilk is to state the simple things. Okay. Now, moving on from the intro paragraph and that earlier section there, a couple of things I'll point out in relation to the capital gains tax area. We'll do this first and then flow down through the CAT area. This is quite important for your success in these types of questions, and indeed any P6 question, really is to state the simple things first. You know, the number of times that I've seen students lay out questions that are, or lay out answers indeed, that are similar to this, where they tend to go straight into the more difficult bits is quite a lot. Now, I think that they've done it okay. I think they probably could have gone a little bit further. Now, the capital gains tax area here is fairly straightforward if we sidestep the reliefs for the moment, because essentially what we have is that the father making a gift to his son. So one thing we could have done, which they haven't, but we would have got marks for, is mentioned the fact that they're obviously connected and that obviously the transfer would be at full market value. They have certainly mentioned the fact that there's no proceeds. That's not a problem at all. And I think that's just on the right-hand side. I'll draw your attention to my sort of annotation here, where I've said that, you know, it could be that you could add in here proceeds less cost equals gain. Now, do bear in mind that the CGT section of this particular question is only worth 5 marks, so we need to be quick and accurate. We can't write 2 pages for CGT, certainly not. But I do think that there are, you know, there's an alternate way to come at this first paragraph. I like what they've done, but maybe there's a mark to be had for simply saying that it would be proceeds less cost equals gain, that perhaps that no AE would be available because of the retirement possible retirement relief claim, and that CGT would be payable at 33%. Okay, so let's do the simple things first when we introduce, and then move on to the more difficult things. And really the more difficult thing and the key thing within this question was just this area of retirement relief. Now again, conditions are key for you. We don't necessarily need to know every single one, but we've got to know the basic ones. And what you'll see if I just move the screen down a little bit is that really they've just used a sort of a numbering technique to simply list the conditions vis-a-vis his situation, so Michael's situation. And the first thing that they talked about is, you know, age. Yeah, the idea of him being 55 or above. Notice that they've also said, yes, that's satisfied. So, you know, bear in mind, we've been asked to give advice. You know, you're writing a letter to a client. They have no knowledge. You're the tax expert. You're required to advise. So do tell them that they've satisfied the condition. Okay. Next condition here is just this ownership one for 10 years, you know, and again they've said, well, yeah, you have owned it for 10 years, therefore that's satisfied. Third key thing, and this is where we have the issue here, is really that the property for retirement relief must be a qualifying asset. So in this case, what we're looking at is a trade or a trading business. So it seems that he satisfies that particular a condition. And the only issue is that for this chap Michael, he needs to have been trading for the last 10 years. So, you know, someone who doesn't know their conditions perfectly could be a little bit stumped there. So what I'd said, and what I say on the right hand side here, is just watching out for sort of exceptions to rules. And in this case, the EU early retirement scheme really allows us to take that 10-year period really up to the date at which the property or the farm was let. So really it's a get out for this trading period up to the point at which the transfer takes place. So if he hadn't retired under that scheme, then we would certainly have a problem, but he does. So in effect, what we're saying is that this EU early retirement scheme solves the problem of him having retired early, indeed under the scheme, and not satisfying the normal conditions for trading up to the date of transfer. Okay, so watch out for that in future questions, and also note down the bottom that it says, you know, as a result of the above, it seems that you would qualify for retirement relief. Last point here, number 4, it's not so much a condition to obtain the relief as a sort of a caveat or indeed a warning to say that yes, you can get it, but you need to retain ownership for 6 years. You know, failure to do so will result in CGT being payable. Okay, and that's by John rather than Michael. So in a sense, you know, we're saying, yes, the above 3 conditions are in play, looks as if it would be okay, but just watch out for this 6-year kickback of the CGT, and that would fall obviously on the son rather than the father. Okay. So in terms of a conclusion to the CGT area, bear in mind we've only got 5 marks here, and this is the 100% answer. If we could just get some key points down, we would certainly get over that 50% or 2.5 out of 5 barrier, which is what we need to do. You know, nice that they've concluded here. Yeah, they've said in effect, it seems to us, or it seems to me, that based on the information that you provided, that you can transfer the property can be transferred, and it would be free of capital gains tax. Okay, certainly no sitting on the fence, as I've said. They've asked for advice, you're required to give it to them. Okay, so moving on from this area to the CAT area. Okay, now similar sort of thing here. Do bear in mind that this cut and paste is directly from the e-text for FA12, so the numbers are slightly out, but I've adjusted them where relevant. Okay, now similar sort of thing as I said to you in relation to capital gains tax. Really, what we're going to make sure that we do in questions of this type is to let's give the basic information first, and that's very much what they do here. They've said that CAT applies to gift and inheritances. They've also advised in relation to the threshold amounts for father to son transfer. You'll notice there's change there to 225k. It's just to draw your attention to the rate here. That's obviously relevant to FA12 rather than FA13, our Finance Act. Okay, so what they've done is just some basic information here. They've introduced it. They said it does apply to gifts and inheritances. Here's the threshold information that was given in the tables anyway, along with the rate. Okay, and then in addition to that, this is probably more evidence of the simplicity of the first part of this answer. Certainly, is, you know, they've actually worked out the tax value without any reliefs. So for just draw your attention to here for FA 2013 what the figure would be. Okay, so, you know, let's do the simple things first. Students tend to forget that area, as I've mentioned in my classes quite regularly. You know, doing the basics. You know, the marker is looking to test your full knowledge, not just your knowledge of the really tricky areas. They want to know if you know about CAT, and this is or this shows that the individual knows a little bit about CAT. So we're scoring marks just for doing this, not just the difficult bits down below, the farmer test and all the other conditions. Okay, so certainly, as I pointed out here, the bulk of the marks are for the farmer test, but we can certainly score good marks by stating the obvious. Okay, so if we move down a little bit further, what we see here is that on the face of it, it looks as if agricultural relief could be in play. But if we've learned any detail about agricultural relief, we'll know that that sort of write down of 90% is subject to the farmer test being achieved, as it were. And really that involves that sort of 80% percentage of market value of all property. So really what we're saying is that the individual concerned, i.e. John, must satisfy this test. Okay, and how is he going to do that? And you'll note from when we look at the answer a little bit further down that the problem that he has is that in the first instance he doesn't actually satisfy based on the gross value of his assets. Okay, so in terms of the detail on this, what you'll see, aside from what I've said above, in other words, a simple intro, the first thing that they do is say, okay, very clearly, this is a 90% write down, or you're going to get relief, or you could get relief at, you know, in effect, showing the MV at 10% of what it is, so 10% of £2 million. So it's a very, very significant relief for this individual potentially. They have mentioned as well this ownership issue. You recall the mnemonics on these slides that we use in class in relation to these areas. So we've got a retention period of 6 years. Okay, and they're making the conditions as they go down the page very, very clear. So what about this farmer test, and what's the problem that this individual has? Well, the problem is really that we have to make a calculation, of 80% of the market value of all property held by John, in effect assuming that the transfer has already been made. So you'll see down the left-hand side of the screen here, you'll see that if we look at the value of the property that's about to be transferred, and indeed the assets that he already owns, we're not given any other information other than that, we see that the 80% would be 2.2 million. So that gives him a problem in effect. Okay, so the issue for him really is, well, given this problem, what's he going to do about it? In other words, what can he do about it? Now, before I talk about possible options for him, I'll draw your attention to the fact that there's just one slight twist with this farmer test and the 80% rule, and that's if we had a principal private residence. In other words, if John owned a PPR on which there was a mortgage, the revenue kindly allow him to deduct any mortgage from that. But that's really the only thing that can be deducted. So broadly speaking, it's a straight 80% of the market value of all property, including the value of the transfer, less any PPR mortgage. Okay, so in essence then, John's situation is such that if he doesn't do anything, then he can't avail of the relief. But if you put yourself in his situation, I expect you'll agree with me that what you'd be thinking of, and what we would be thinking of in practice, is, well, is there anything that we can do? And there's a couple of things that he can do, and essentially that they all sort of revolve around getting up or over that 80% barrier, possibly by getting rid of some of his assets. Now, we're only told about this, the investment properties that he has, so it must be in that area. Okay, so in terms of solutions, if I move slightly further down here, onto a new page. So what could he do to sort of resolve his situation? Well, this section is, again, it's very well drafted. You'll see that there's a clear paragraph introducing the approaches or the options that he has. They've made it very clear within this CAT section. It's sort of come in 2 or 3 different parts so far. The first one was, well, here's the basic information on this tax, exactly like the CGT area. And here's the conditions for obtaining agricultural relief against CAT. Unfortunately, it looks as if the farmer test is not in play. And then the next section in front of us here is, okay, given that, what can he do? Okay, so in terms of possible approaches, really they all center around this area. They all center around this idea. Well, if he doesn't hack it in terms of the 80% rule, then he needs to get rid of some of his non-agricultural assets. And by get rid of them, it can only be through a sale or a gift. So what they're asking you to do is outline the approaches, but also give the tax impact of those approaches. So the first thing that you'll see here is that in relation to point number 1, well, he could just sell the properties, but the problem that he has there is if he sells the properties, he's going to have cash, less what he uses to pay off the mortgages. And they've already given us the figure of 250k as the gain. They don't ask us to go any further than that because they're asking us for broad measures here. So we don't need to do a calculation as such because we're putting this forward as a possible solution. Okay, bear in mind the number of marks here as well. We're under time pressure. Okay, second one is here we see that here's the reason why the sisters were mentioned. There's no other information apart from that. They're just sort of sticking out there like a sore thumb. that's a prompt from John Morrison to use them in some way. So if we're lucky enough, we can work out that perhaps they could receive these properties. In other words, he could simply gift them. But the problem with that is that it crystallizes a CGT liability. In effect, we would be talking about some sort of CGT bill. I mean, over and above that, obviously gifting, as we know, attracts CAT. Yeah. Note the change in the threshold there from FA12 to FA13. So doing this, taking this option could be a solution, but it could well mean that the family as a whole are going to end up with some sort of bill. There is a sort of a get out clause here in relation to the CAT that is payable on this possible gift, and that's the Cgt Credit. In other words, this idea that we have a relief that allows us to credit against a CAT bill any Cgt that we have paid. So look out in the text for that area. I think I've noted it as page 240. Just one other point in relation to that credit. Nice point to make here. They've said that the capital gains tax certainly can be used to offset against the CAT, but the sisters would have to retain the properties for 2 years. Easy to forget something like that in the heat of the day. But let's just try to remember that really that's the only sort of condition for this CGT credit, is that the property or whatever the asset is retained for 2 years. Pretty simple to remember that. Okay. In terms of a sort of a final option for John and his father, really the final one is just really this area of perhaps transferring to the father. We know he's widowed, so the mother isn't available. But same sort of implications for point number 2 above in relation to the threshold. The Group 2 threshold, note not that it's in reverse at 225 and being Group 1. And in addition to that, slight curveball, perhaps you'd call it a sort of a prize winner point down the bottom here, about this idea of gift splitting. In other words, in effect, what they're saying is that if the properties were transferred to the father and then within 3 years he transferred them on to the sisters, what the revenue would say is that contravenes our anti-avoidance provision in relation to gift splitting, and in effect they would end up as being a transfer from John to his sisters, okay, which potentially gives him a problem, gives him a CGT problem, no less. Okay, so don't worry about details like this, and it'd be nice to remember it. But as I said at the outset, we're looking for 50% out of 100 in this answer, not 100. Okay, and we can do that by simply making some basic points, getting some of the conditions. Okay, final point here. We've got this issue of a conclusion. Now again, when I started off this screencast, I talked about structure. I talked about making friends with your marker and really making the script marker friendly. Again, now if I was marking this and the student had taken the time to highlight to me that there's a conclusion coming, I'd be sort of enamored towards the student, I guess, and just making my life a lot easier. Marking is a tricky business, I can tell you. So anything that you can do to make your script stand out from the next person, then I would certainly do it, okay, within reason. Okay. In terms of the conclusion, really it's a sort of a regurgitation to a large extent of what we've seen above. I think perhaps it's a touch long for a student to come up with this. As I've said, this is a 100% answer. It could well be that a conclusion simply suggests that there are a number of options. CGT won't be in play because you satisfy the conditions, but you should give further thought to possible routes towards satisfying the farmer test. I don't think that I would give such a long paragraph here. Obviously, it's good for your revision purposes to make a note of these points, but I'm not sure if I would have gone this far. Okay, I just don't think that you'd have the time in the exam to do such a meaty conclusion. Okay, a nice point here just in this paragraph, I'll just draw your attention to, just in terms of your thinking on this area, that that gift to the sisters does retain the property within the family as opposed to it being sold. So that may well be something that they're considering or they consider as important. They may want the investment properties at a later date, perhaps for one of the sisters who's a student or whatever. And I think the other other point is that obviously bear in mind, you know, when we're gifting something, we're not receiving proceeds. So we have a situation where if we do have a tax bill, in this case a CGT tax bill, you know, that has to be paid. You know, do they have the cash to pay that? It could be fairly sizable. Okay, so you know, watch out for those little small points when you're reviewing these answers, and obviously, you know, as I said before, do try and do as many questions as you can under timed exam conditions, because I can assure you that's the best way to learn. Even if you do find yourself sort of perhaps not doing as well as you thought you would do, or doing very badly when you thought you would do badly, it's really the review of the model answer is where your learning takes place. Okay, final point really is just that last tagline there. Yeah, very, very important, really as important as that first line. You know, I'm not suggesting that you're going to get 5 or 6 marks for opening and closing well, but again, you know, as I said, you know, producing an answer, whether it's a memo, report, etc., that's professional is what you're required to do. And you know, I think getting on side with the marker is much more easy if you present well and if you sort of top and tail your answer in a professional manner. Okay, so that's a sort of a fairly basic summary on this question. I hope that it's been helpful to you, and good luck with your studies.